Hey guys, it's Franco. So, are you waiting for the real estate market to crash? I'm waiting too. So, I had this house. I bought it like 2012, and I want to share my experiences on the real cost of having a house, not just the mortgage, monthly mortgage, not the actual price of the house, but the actual price, including the utility bills and all the repairs that we need to be aware of. All right. I hope you will learn on this video, and like and subscribe if you really learned something, or comment down below if you had something else in mind. Alrighty, let's go on to this video. So you're thinking about a house, and I assume you got a good credit score, at least 600 and up. And you already pre-qualified in your bank, which is the basis of what the bank can loan you based on your salary or your assets. And maybe you have a co-signer, you and your wife, you and your mom, your parents. You're all good on that direction. But is your monthly mortgage you need to worry about? Is the total amount of the house you need to worry about once you're in it? My answer is no. There's a lot of things you need to do inside the house while you're living at it. I'm very sure you're gonna change something, and you're gonna be, for the first couple of years, you're gonna be a little bit overwhelmed of the bills that's coming for you. That's what I felt when I bought my house. I did survive because I'm a little bit frugal, but some people, like at this time of year where the pandemic's going on, I bet there's a lot of people who's struggling to make their monthly payments, including the other bills that I'm telling you about, in terms of their house. So there's three big things that you need to consider before buying a house. Obviously, the loan cost is the first one, the closing cost of your house. That excludes your HOA fees, your tax, your insurance for your monthly mortgage. That doesn't include that. And then for some people, they're buying a house more than they can afford. I mean, the bank qualifies you for some amount of money, but it doesn't mean you can afford it. They may qualify you just because you got a great salary at the moment. But will your salary or will your job be forever? Like at this day, or today's like April 2020, there's a lot of people who went out of work and relying on stimulus package on unemployment. Some people will struggle because the unemployment will not cover everything they need. Usually, a good rule of thumb is 1/3 of your salary is supposedly your mortgage plus your insurance and tax. So, for instance, you got like, I don't know, 5 grand monthly salary. Then 1/3 of that is about 1,600. That's the maximum amount, including the tax, the HOA, and the insurance that you can afford. No more than that, because you need somewhere. The other 2/3 of the money will be somewhere else, your car payment or something, your monthly bills. Even Dave Ramsey said it was just 1/4 of your monthly salary. So again, like $5,000, it's like about $1,250 or $1,250. The second one is cost of utilities. I mean, if you're renting, you're only paying for, I don't know, your energy bill and your water maybe, and that's it. Sometimes it also includes free internet, but that's rare occasions. In a house though, you have to pay for your garbage disposal, waste management. Your sewer also needs to be paid every 3 months. Your internet, you're gonna pay that, and you're gonna pay your energy bill, which is usually higher than when you're renting, because it is a house, not just a freaking apartment. And your water bill. And your internet fee, because most of the houses needs internet, like you're doing it right now. Especially at this time, every student has online school because of the pandemic going on. I don't have light. Hold on. There. That's my light right there. So the 1/3 or 1/4 is just in case you lose a job or your wife has been sick and you're both helping each other, and it's just a good rule to follow. Now, I've said the loan and the utilities out of the three, the most biggest expense. And then the third one, which is this is where my money went all out. The maintenance and the repair of the house. I bought this house, like I said, 1977, and I bought it in not so great condition, because at the time I wasn't an engineer yet. I had a good savings account, and click on this video to learn about saving for your emergency fund or saving for a house and what banks did I use. But click on that. But the biggest expense for me is maintenance. So, like I said, I bought this house 2012. So it's 1977 house, and used to have a wooden siding, exterior siding here, just like my neighbors, just like that, a T111 siding. And the previous owner of this house did not take care of it, so there are some parts without paint or already on the verge of deteriorating. So what I did about 3 years ago was update it, change it to stucco, so it's much more better looking and easier to maintain rather than the T111 siding, just like that. But this is one of the most expensive things that I did for this house, and that's just one of the things that you want to be aware of, because if you're buying especially if it's older than 15 years old, you will have a lot of things to change, and this is one of them if you're unfortunate enough to have that kind of house or this kind of house. But I'm glad that I did it. Now it looks good. I'm one of the houses here that has stucco. So one of the few. Alrighty. So it used to be all carpet on this house. Now it used to be just like this carpet right here, and it was like 1995 carpet. So it's really old. So I'm trying to update it bit by bit, and I made tiles here just like that. I don't know if I can do it. Yeah, here, tiles here and vinyl flooring right there. And it's really hard work, and it's really expensive, especially for the tiles. I don't want to do tiles again because it's hard work, and I did it by myself just to lessen the expense, the labor expense. But it's hard work, so I switched to vinyl flooring just like that. I don't know if I can do it there, but like I said, having a house is not just as easy as, oh, you can pay for the mortgage. Yeah, but you will have to update it. When you're in it, you will change something. And then the roof was it's okay, but it needs to be repaired. So I did replace everything and included the solar panel, because I'm really a big renewable energy guy. I cannot pronounce it. Renewable, yeah, that word. So, and then the sunroom, which is that, the roof was like or the ceiling was not in good shape, so I need to change that too. So it's an old house, so I expected that when I came to see the house, but that's all I can afford, and it was quote unquote livable. And my expenses from 2012 when I bought the house till 2020 right now is almost about half of the price of the house before when I bought it. And then, like I will tell you, like when I bought the house, it was about a little bit under 100K. 3 bed, 2 bath, 1,700 square feet. And then what expenses that I did on my maintenance and repairs? The main one was like change the carpet. It's like about 7K and running right now. The roof, I need to hire someone to do that, so about 8K. The paint hits $3K, $3,000 and running, and still increasing. Changed the exterior to stucco, and that's about 16K. And the solar panels is 9K. So in total it's about 40K since I bought it. I spent in this house, excluding the tools, all the little things that I bought in order to do the work. So the roof, like I said, I didn't do that. The solar panel, I didn't do that. The stucco, I didn't do that. But everything else I did, and it's giving me good things. So you might be like aspiring to have a house because of the stock market is crashing. Obviously the real estate will come soon follow. I just want you to know that there's more into it than just your mortgage. All right, and so obviously if you buy a newer house, you have more less of a headache. But it's the same thing. You will change something. You will change something in the house because there are some things that you can't ignore and you just want to change it. And there's always going to be repairs, as small as the faucet just freaking break or your toilet doesn't work. You will repair something or change something. So having a house is an investment if and only if you're renting it for somebody else and you're earning money. But I can't. In my case, I can't because I got like young daughters that needs to have a safety, and I don't want any strangers here in my house. And if I were single, I'll rent it out. I'll rent the 2 rooms. I'll stay in 1 room. Or if you have more money, buy a duplex. That is way better than having a single family house. And then if your job requires a lot of traveling and transfers, you're better off having an apartment. I mean, most of my military brothers are on an apartment because they don't want to own a house, and then 3 years later they're gonna fly away or move somewhere else. It can be an investment, like I said, if you're renting it out from somebody else and if you bought it in a good price. But it comes into a lot of expenses. I hope you learned from this video, and like and subscribe to it. That's my history right there. Bye.